Okay, let's have a look at the Euro US for the 30th of October 2015. As you can see here, there was a very strong price push just prior to the opening of Frankfurt. I've taken a short in this wick here. Served badly, but the market continued, so I wasn't overly concerned. Basically, there's the low of the Asian session, so click that. I was expecting the market to bounce somewhere between that yellow zone and that yellow zone. So I've taken the trade on the fly by pressing sell, and this collapsed very quickly before my trade even reached the execution server. So I was served around here. Hide that channel. My assumption was there's the last channel from this low here. CV, click the high. So I'm expecting the market to go down to around this value, certainly to this value on, just through visual looking at the lows. There's enough meat in that zone there for this trade to get me to break even. So a free ride. Let's hide the channel. Market does in fact run down. It bounces not significantly, but it bounces on the last channel, as you can see from that high. It's more indecision than anything else. The only thing that gave me concern was the push on the opening of Frankfurt. You can see there it pushed straight down. That had me concerned that they were going to reach up, which they in fact do, but it's a drifty market. Nothing very strong from a bull's point of view through there, but it does drift up to take out that high again. Alright, so close of trade there. There's 24 pips, so 23 pips for the pre-Frankfurt run. Okay. Once again, we're expecting a bounce. Last time it bounced there, it bounced significantly. We're expecting a repeat of that performance, but from a channel point of view, CV click, we're expecting it to bounce to the 50%. Now that is a 13-14 pip channel, so a bounce of 7 pips is more than enough to get me to break even. So I'm happy with that trade by way of entry order. When we take the trade, we're generally, obviously it's filled, there's a little bit of a pullback, and then she runs. When it runs, there's the euphoria and optimism that all traders feel, and we get aggressive and think the market's going to come up to around this point here, which it in fact does, but it takes a long time to do so. When the market pulled back to this last channel, as you can see there, it did so without any continued strength for about 20 minutes. So I lost faith in how fast it was going to take to get to that point. So we get more conservative. C-click, there's our take profit. And quite frankly, happy to be out of the market. 20 pips, so there's 19 pips on top of that, which is 42 pips, and happy to be out of the long prior to the pullback for London. Okay, I was looking for a short based on X-clip, there's support and resistance line there. I was expecting that previous channel where it bounced there for a bounce here, but I did wait for a double tap and no trade there as the market ran off. Okay, so there's the last channel. We're expecting the market to bounce somewhere through here. Now, at this point, just hide the channel. Entry orders taken off this low. That was the last point it ran up from. We get a failure here. You could manually take a trade there. Preference would be a entry order there. When it's filled and runs, your initial expectation, enthusiastic analysis, is through to there. Okay. Now the market does actually achieve it later, but you can see initial pullback. There's your first channel. Your expectation would be double that channel, which is a bounce point around here. To me, there's significant failure of north movement through this zone, so take profit off that high and look for another trade. Okay, so there's 17 pips, so 16 onto that brings you to 58 pips. Now you could have taken an entry order long off here. Once again, my gut told me that we're going to get a bounce off this high, so I did not take a short scalp there. Just when I say a short scalp, a short time-based scalp, and waited for my entry order to be triggered here. The push through meant we wore some heat, but we would break even within 2 minutes. All right, so let's have a look at that run. C-click, you can see there it's basically run 2 standard channels. I was hopeful of a little bit more, but this point was too much of a target. When the market moved down and bounced, it then had a complex retracement, which had me tighten up my take profit to that value through there. All right, so there's a 17, so there's 16 pip run again, which brings you to 74 pips, and your next trade is off this low for the previous analysis I just showed you. Okay, now market runs. We're expecting the last channel to be duplicated if it does indeed break the channel, so it should bounce there. This, however, is a severe pullback. I would be taking profit earlier. I didn't actually take that trade. I had finished up for the night, so leave it at that, but that is your next trigger to take a trade long. There were a few triggers short. I didn't bother analysing them in any detail because the market generally was in a drift up, so I didn't want to waste your time with the analysis. You can see here there was a news event in the opening of New York, and the market didn't have any sustained direction until after that point. There's the close of Frankfurt, there's the close of London, and the market took back all the gains, as is common. Money is looking for money. Contracts are sitting there on the market. When the contracts are there on the market reaches for them. Okay, so there's a channel breakdown of the Euro US for the 30th of October. I hope it's been helpful. Bear in mind, always look at the micro channel. There's your last channel. And there's your last channel. There's your last channel. Always look for the last range. So it's not foolproof, but it's a good, quick way of doing on-the-fly analysis to determine where to take a trigger. That agrees with that. Take a short, enjoy the bounce. Hope that the channel breaks so that you can take profit at an extended run. All right, good luck with your trading.